Well, what a difference a year makes. Unlike today's weather, the Sydney property market is anything but overcast. Just 12 months ago, we were told to brace ourselves for housing prices to fall 20 to 30%. Fortunately, that never happened, and values only fell by 2.1% on the national index, with Sydney hurting just a fraction more with a fall of just 3.1%. 12 months on, the Sydney property market has not just recovered, it's booming. For every listing being added to the market today, there's 1.1 to 1.2 sales. That intense rate of absorption is creating a FOMO-like factor that you're feeling in today's market. As a Sydney property owner, this is great news. So let's take a look at what's driving this and what to expect in the coming months. Last month, the National Home Value Index recorded a 2.8% rise, which was the fastest rate of appreciation since October 1988. And Sydney's leading the pack with a 3.7% rise for the month and 6.7% rise over the full first quarter. Sydney's property values are at now record highs, exceeding their previous peak of October 2017, with a median price for houses in the last quarter of 1.1 million and for units at 775,000. This recovery trend is being driven by houses and not units. Why? Number one, with investment activity relatively low and 46,000 units still under construction and working their way through the pipeline across Sydney, this is keeping the heat out of the unit market. And number two, thanks to COVID, we're seeing people's working conditions remain much more flexible, and as such, a change in people's preferences for lower density housing away from city areas. But it's not all bad news for units. For units outside the CBD area that have a large floor plan or are a part of a high quality development are still doing really well. It's the smaller, higher density stock that's slightly on the nose at the moment. The Central Coast has been one of Sydney's standout performers. However, we're also seeing strong positive changes in value from the northern beaches, Sydney's outer western suburbs, outer southwestern suburbs, southwest, Blacktown, and Sydney's eastern suburbs, all recording mid to high positive single-digit growth in change in dwelling values over the last 12 months. The inner west, Parramatta, CBD, and North Sydney have had far more modest improvements, with change in dwelling values being in the very low positive single digits. Well, it's no secret that money is cheap, and in May 2021, the RBA has kept interest rates at their record low level of just 0.1%. This is certainly most of the fuel that's accelerating the Sydney property market right now. These low interest rates have meant that this strong buyer activity is being led by first home buyers and owner-occupiers, not investors. Unlike in 2014, where we saw investors take up 60% of mortgage demand. The good news is, with this being the case, this is keeping APRA at bay, and we're not likely to see major credit reform introduced to slow the market, like they did in 2014 to 2016. Owner-occupier and first home buyer activity is considered to be far healthier than if this property boom was led by investors. For the immediate term, we should expect to see these metaphorically sunny skies continue. However, with many of the government stimulus packages starting to wrap up, this is likely to cool first home buyer activity in the market, bringing more balance between seller and buyer. So if you're sitting there thinking that maybe now's the right time to sell my property and take advantage of this hot property market, my team and I can help. Proper are now helping smart property investors sell their investment property with our Sydney sales service, led by me. For a no obligation appraisal and to learn why we're well positioned to help you achieve a great result on the sale of your investment, get in touch with me for a chat.